Hey, this is Matt from InvestiQuant. Today is Monday, March 15, 2021. Friday finished the week strong as we rallied into the close, closing at another all-time high. And in doing so, we triggered an overbought reading on the 2-day RSI. So we finished the week very strong, and then today being Monday, we are starting the week up a little bit as well. So what we're going to do this morning is take a look at what has happened historically when you get an overbought reading on the 2-day RSI that triggers on a Friday, and then on Monday you gap up. So let me go ahead and set that up in Discover. We'll use all four instruments. The setup's going to be based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time. Now, we're currently trading higher, and the opening filter makes quite a difference on this pattern. So if by chance we end up falling back down below the prior closing price from Friday, you'll probably want to come in here and take a look at what happens if we gap down, because the results are quite a bit different. But we are currently trading higher, so I'm going to add gap up here. Next, I'm going to go into the indicator section. Grab the day after the 2-day RSI is above 95. This is an overbought reading on a short-term basis. That is the very first option here. And then I'm also going to add that is above a 200-day simple moving average. I'd normally add above a 10. I'll go ahead and grab that as well. Probably doesn't really matter for this pattern. And then lastly, I'm going to go into the calendar section and say that today is Monday. So let me hit equals next to Monday, and now I can hit view results. All right, and here we go. These are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time. When you gap up on a Monday following a 2-day RSI reading of greater than 95. This is taking place above a 10 and 200-day simple moving average. Historically, the S&P has 33 samples, the NASDAQ 44, the Dow 44, and the Russell 32. If we look at the win rates on them, you'll notice the S&P and the Dow are weak, whereas the NASDAQ is neutral and the Russell is a bit stronger. So we're not seeing agreement across all four instruments. We're just seeing two of them that are a bit weak, with the S&P being the weakest here at 30%. The Dow 36%, the NASDAQ 50%, and the Russell 59%. So we are a bit all over the place there with win rates. If we look at average win, average loss, you can see the average win on the S&P, even though it has a weak win rate, the average loss is not as big as the average win. The average win is quite a bit larger there. That's not the case for the NASDAQ. Average loss is bigger in the NASDAQ, and the average win is larger in the Dow and the Russell. So 3 of the 4 instruments have larger average wins than average losses here. And then the win rates are pretty mixed, with the S&P and the Dow being a bit weaker. So not the most consistent pattern across the board, but a little bit weak historically on the S&P and the Dow. And as I said earlier, the opening location does make a big difference. So if we are not gapping up, this pattern does change quite a bit. So that might be worth digging into on your own. Good luck today, guys, and we'll see you next time.